Welcome to the Recon Trader. In today's video, I will share with you some tactical analysis over on the Bitcoin charts as we are now into the month of May, today being May 1st. And there's an old adage of sell in May and go away. Now, that adage basically applies to the historical weakness from May to October when it comes to assets like stocks, and even Bitcoin has had some pretty rough Mays, only to turn things around at the end of the summer going into September and October. So are we looking at another possible sell in May and go away scenario? Now, as traders, we don't make predictions. We just look at the actual possibilities. And to do that, we will jump over here to the Bitcoin chart. And we're looking at BTC USDT on the daily candles over on the Binance exchange. And right now, the first day of May, Bitcoin is selling off and is actually crushed down below a pretty key level that I'm aware of. And actually, if it breaks this 28,000 level, that would also then have Bitcoin perhaps looking back down towards this zone of support around 27,000 to say 26.5, which is where these wicks come into. Now we can drop in the fib retracement from swing high to low. And you can see Bitcoin's price did just crush down through the 28.5 or the 786 level on our Fibonacci retracement, which had at one point in time been prior resistance. And really we were looking for that to become future support. However, it looks like Bitcoin has crushed down through that. But a stronger level of support is coming in at the 618 level, which is 26.6, or call it around 26.5, which is where these wicks come down into. And again, Bitcoin found pretty good support back here in March. However, a breach down below this 26.5 level, and Bitcoin could then see that sell off in May, and perhaps the bulls go away until maybe September or October. Now, something else worth noting, pretty much through March and April, Bitcoin was setting higher highs, higher lows, another higher high, another higher low, and then it topped out here with a higher high at 31,000, moved sideways, sold off, and then set a lower low, breaking the trend of higher lows, and then followed up with a lower high, breaking the trend of higher highs. So now is Bitcoin about to set another lower low, which would take it down below 26.9. Perhaps that lower low comes in at 26.5, or, as I mentioned, if it breaks 26.5, then the lower low could be much lower. And that might look like something around the 25,000 level, which would be the 50% Fibonacci, which was a little bit of prior resistance back here on these candles. And of course, we always look for prior resistance to flip into support. However, this may not be the best level of support. The target I'm looking at if Bitcoin breaks 26.5 is probably going to be this 382 on the Fibonacci, and that puts it almost at 24,000. That level has recently acted as support right back in here. And so perhaps the 382 or 23.9 or call it 24,000 level could be the next level of support for Bitcoin's price if it breaks 26.5. Now after this 382 level, it's kind of open air, probably down to around 22,000, maybe 21,000, or even lower back here at 19.5, which was the pivot low before this run up to the 31,000 higher high. Now, if we drop in the Recon EMA ribbon, these are basically moving averages. And in last week's video, we were keeping an eye on Bitcoin's price as it was dipping down into the lower ribbon on the EMA ribbons. However, since the ribbon hadn't flipped, we were looking for this lower level right here on this candle to act as support. And Bitcoin got support and pushed back up. However, you can see the price rallied up to a lower high and has since then rolled over. and Bitcoin's price has found itself in the middle of the ribbon once again. Now, if by some chance the buyers do actually step up and turn this price around, perhaps we get a new higher low and could be on pace to setting a new higher high. However, right now, the bears are in control of this price action and are pushing Bitcoin's price down. In addition to something to be aware of, this week, Wednesday, the Fed will be making an announcement regarding their rate hike. The market is expecting a 0.25% rate hike. Anything different from that could lead to a lot of volatility, so you probably want to proceed into this week with a little bit of caution. So, to quickly recap, a few key target prices I will be keeping an eye on, at least for this week, will be back down here around the 618 level on the bearish side. That's going to put Bitcoin's price somewhere between 26.6 or call it 26.5, a breach down below that, and then more than likely Bitcoin's price will continue to head lower. Now, on the flip side, if we get some bullish momentum towards the top side, the first target, obviously right now for Bitcoin, is to get back above the 786 level or this 28.5 level. After that, there's some pretty strong resistance, it looks like, from about 29.5 to around this 30,000 level where these wicks come into. There's a lot of wicks on the top side, which does indicate weakness on the buyer side. Now, if the buyers can continue to push the price up, the next target is 31,000, and that in all probability will be a pretty strong level of resistance. So, I think that's enough jaw-jacking for this video. The question at the end of the day is, everyone going to sell in May and go away? Or can the bulls buck the trend and push the price up? Now, with that in mind, I will do an updated video on this price action in the near future, so now would be a good time to shoot the subscribe button. If you like this video, do me a favor, spike a like. If you have questions or comments, drop them in the comment section down below. And until next time, remember, never send your money into battle without first doing your recon. See you in the next video.